Welcome back. The current Victorian government has been agitating to take away the need for commercial real estate agents to actually be licensed, and the Real Estate Institute of Victoria is not happy. So why is the government acting this way, and what is the argument against it? Enzo Raimondo is the CEO of the Institute, and he joins me from Melbourne to explain all. Hello, Enzo.
G'day, Peter. How are you?
Now, every time I meet you, you're always a very, very happy kind of guy, but I don't think you're happy on this one, are you?
Not very happy at all, Peter. This government, in blissful isolation of the advice of the real estate profession and the Estate Agents Council, which is the government's own advisory council, has decided that anyone can trade in real estate on transactions above $15 million in sales or $10,000 in leasing, which means no education, no qualifications, no probity checks, no trust account, no professional indemnity. It's a free-for-all, and it's a retrograde step that takes real estate back 50 years.
OK. Now, when is the government voting on this?
Tomorrow. The Cabinet, this is a regulatory change, so it hasn't gone through Parliament. And here is this government saying that on the federal fuel excise it needs to go through Parliament, and yet on this one it's saying, well, a regulatory change is okay. So it's a government of double standards, and it actually has misled us because it said this issue was off the table this year.
Is this a federal or a Victorian government thing?
This is a Victorian government issue at the moment, but I understand Queensland has a similar proposal through its regulation at the moment.
OK. Why, just playing devil's advocate or asking the question of a devil's advocate, why would the government not want real estate agents to be involved in big deals, you know, 15 million plus? That $10,000 leasing doesn't seem very big, so why don't they want commercial real estate agents involved?
I don't know the answer to that, Peter. All I can do is speculate that they've acquiesced to the large property owners, the big shopping centre owners, the big property trusts in Australia. The point is that a lot of the small businesses in Victoria, and if this legislation is replicated through each state, a lot of the small business owners in every state in Australia are going to be at the mercy of the big property owners. And this is something that I can't understand why the government is rushing through 5 weeks before a state election in Victoria.
Give us an example of how the big property owners would be able to exploit the small businesses you're talking about.
Well, I mean, in shopping centres, they can deal direct. They have to deal direct with the landlords. They can't have an estate agent to negotiate on their behalf. They won't be able to have the protection of a trust account. They won't be able to have the protection of the mediation or the valuation if there's a concern in a rental dispute. The REIV conducts mediation and provides a valuer. That will all be gone with this dealing direct with the property owners. And as I said, it actually, not only does it introduce that the property owners can deal direct with the tenants and actually have the upper hand, but it opens up the industry to unscrupulous traders that don't have the qualifications or the experience or don't have to abide by the Estate Agents Act. So that means in Victoria, anybody selling property under $15 million needs to be an estate agent and licensed. Anybody dealing with property above $15 million doesn't have to be. So I don't understand the logic behind that. The government hasn't been able to explain the logic behind that. But more importantly, and I want to stress this point, this government told us in April this issue was off the agenda this year, and now 5 weeks before the election, for some unknown reason, it's back on and it's going to be decided tomorrow.
What is Labor saying about the issue?
I think Labor is waiting to see what's going to happen. Obviously, in Victoria, we're in election mode now. There's 5 weeks before an election. We want both the opposition and the government to rule this proposal outright, because it just doesn't make any sense. It will disadvantage small business. It has no logical reason to be introduced. They're claiming $750 million worth of red tape reduction. I can't understand how that can happen with 2,500 real estate businesses in Victoria. I don't understand how a $200 licence is going to cut $715 million. I think the numbers are rubbery. I think the government has lost... I think they're in a vacuum. They've lost all sight of reality in Victoria at this present time.
OK. So I guess the bottom line is, by tomorrow afternoon, are you going to know your fate? And if you lose... And Labor's not supporting it, you're going to have to live in a new environment, won't you?
Look, we will deal with whoever government's elected in the next 5 weeks in Victoria, but I will make this clear to both the current Victorian government and the opposition. We have a fighting fund. We will fight this right up until the day of the election, and we will let every member of the public, every small business owner know, because they're behind us. The Council of Small Businesses Australia are behind us, COSBOA. That this is a retrograde step, it's an illogical step, and it's not well thought out at all.
All right, Enzo, good luck with it. I'll follow it up and maybe talk in a few weeks' time. Thank you.
Thank you very much, Peter.
OK, so the listed property company Centuria has a new offering focused on commercial properties not in the CBD. Nick Collishaw is the CEO of the listed property funds at Centuria, and he joins us to explain why they've created this product. Mate, how are you?
Peter, I'm well, thanks. Good to be here tonight.
All right, so tell us about Centuria. It's a listed property. Just tell us what it actually has been set up to do.
Well, Centuria is a specialist property group which covers Australian real estate across commercial, industrial and the retail space, but only here in Australia. And we, over the last 15 years, have been investing primarily on behalf of high net worths in closed-end funds, so funds which have a start and a finish date on them. Yeah. And we've decided to broaden our offering and move into the listed markets to complement our offer to the high net worth individuals. OK, so my viewers understand what your traditional model was like. Give us an example of a typical product that you've sold to private investors. Earlier this year, or sorry, late last year, we acquired a half interest in the Channel 7 headquarters in Everleigh in New South Wales. Yep. So that was an income product, based around the very strong lease covenant to Channel 7 and a number of film studios, which give an average lease of over 11 years, an income return close to 9%. So we generate generally income-producing products with an inflation hedge of capital gain. Yeah,
and basically, if, for example, it costs $100 million, you might, if you're lucky, get 100 people giving you $1 million. The 100 million goes in, you purchase it. The rent from it then goes to pay the quarterly dividend payments. Yep.
Indeed.
And you work off 9%. I guess if a terrible recession came, you wouldn't necessarily make it, but generally speaking, you can get that kind of return. But also, eventually you sell the building and the capital gain is thrown into the pot as well.
Correct. Yeah. That's right, Peter. And because real estate that we invest in is underpinned by long-term leases, while the market does fluctuate, the revenue is generated by the underlying lease covenant, so the tenant. So we look very closely at who's paying the rent.
Yeah, the calibre of the tenant is really important, and clearly Channel 7 is a strong tenant. So you're now venturing into another space. So explain the difference between what we described there and what's the new product. And what's the new product called?
OK. Well, what we've done in the past, as we said, is closed-end funds, a start date and a finish date, right, and no liquidity. So your investment is in there for a fixed period. Yeah. What we're creating now is very much an old-fashioned, tried-and-true product, which used to be called a listed property trust. In today's world, they're called real estate investment trusts, or REITs.
REITs, yeah.
And our one is called the Centuria Metropolitan REIT.
OK.
Metropolitan because it's describing where our assets are located.
So rather than being in the CBD, which a lot of these are often on, you're looking around for high-quality suburban business precincts, effectively.
Business real estate.
Yeah.
Indeed. Over 35%, so over a third of Australia's office space is located in the metropolitan regions. Yeah. And 90%, or over 90%, of industrial space is in that same district. So in a New South Wales sense, stuff like Norwest Park and Macquarie Park are a classic example of metropolitan business precincts. Indeed, and Chatswood, Hornsby, Epping.
Can you go around the state? So we do have viewers
in St Kilda Road, or Fitzroy, West Perth, Keswick in Adelaide, New Farm.
Okay, you've impressed me. You got me. Okay, so this is going to be a listed product.
Yeah.
What's it called again?
The Centuria Metropolitan REIT.
Okay, now when does it go on the market?
Well, we're in pre-marketing today, and we will officially launch on the 13th of November when our product disclosure statement we expect to be released from ASIC.
Do we know what the issue price is at this stage?
Yeah, what we do know, I can tell you the basics of it. It's a $2 issue price. It's an 8.25% initial yield, growing to 8.5% forecast in FY16. So a really strong yield. Low gearing. You know, what we're really focused on is being conservative in a volatile equity market that we face today.
Yeah.
You know, what real estate is about is being that rock of an investment that you can look at it and say, that's the income. I know it's underpinned by national leases or international leases in some of our case, and they can derive that predicted income. Also, in addition, you know, we look in the Centuria brand, our DNA is about the deep value and what other uses that the assets could be put to. So within our portfolio, we have assets which are part of this urban renewal and residential conversion. Residential is a much more valuable use of land than the office building.
So you're saying some of the buildings in this could well be converted to residential along the way?
Oh, indeed, indeed. And our investment philosophy and the strategy has been to buy assets that have that maturing factor about them. So,
all right, so would someone be able to identify the properties that are initially in the fund?
Certainly.
Yeah.
You know, we do have an information flyer, and certainly via our website, we have all of the portfolio information available.
And some of those properties in there one day could be converted to residential, or are some already earmarked to be converted to residential?
Well, with the speed of the New South Wales planning or via what's called a urban activation precinct, we do now already know that our building in Epping, which was a commercial building and still remains fully tenanted, is now residential zoned. So that opportunity is available to us, subject to us getting the development application approved. And that's about 12 months away.
Okay. Now, UBS have looked at this and they've rated it, haven't they? So what have they said about this particular property, product?
Firstly, both UBS and CIMB investment banks are working with us on the equity raise for the transaction, and both groups' research come out in very much full support of the listing, and indeed in the UBS research report, remembering that it's a $2 issue price, suggests that their near-term NTA guide is somewhere between $2.02 all the way up to $2.08 or $2.09. So, you know, in our sense, you know, real estate is a long-term investment, but by the investment bank's own research, they're saying, you know, short-term, we expect an uplift.
Yeah. Now, of course, some people say, well, because they're a part of it, they would say that anyway. But I know the people at UBS, they also know that their reputation swings on this. If they give us the thumbs up and it doesn't work, it's going to reflect badly on them, and they don't want that kind of, you know, association, I presume.
Well, Peter, you know that UBS is a global business, and you know every deal goes to the reputation, and for UBS to put their badge and indeed their brand associated with ourselves has gone through a rigorous process to make sure that all of our information is correct, market pricing is right, and lastly, that it is an attractive offer.
Okay. I guess the important point is where your older products, you're locked in for a long time until you eventually get to the end point. At least now it's listed, people can get in and out, and that's the liquidity issue that you're talking about, right?
That's correct. You know, there's a place in a balanced portfolio for both fixed-term investments and more liquid investments. The REIT market allows people to have that exposure to real estate and give them the liquidity of an equity market. So whilst overall the REIT market moves in line with the stock market, what's called the beta or the movement is generally half of that within the stock market itself. So a beta of 0.5, the market goes up 1%, we're likely to move 0.5%, and likewise on the downside.
Okay, Nick, well, thanks for joining us. I think you've explained it basically for everybody, and people who read the PDS and move accordingly.
Thank you, Peter. Lovely to be here.
Cheers, Nick. Okay, for a wrap of today's business news, here's Carrington Clark.
Hi, Peter. An afternoon rally wasn't enough to pull us back into the black today. And that was in large part because of the price of black gold, also known as oil, remaining under pressure and energy stocks continuing to drag on our local market. In the end, we were off 0.1% at 5,452 points. Bright spots were provided by the banks and healthcare stocks. The Aussie dollar gaining strength today and was sitting at 88.2 US cents at the close of trading. Australians are becoming more upbeat about the economy as worries about the federal budget fade and the share market rallies. The ANZ Roy Morgan Consumer Confidence Index has risen 2.7%, hitting its highest level in 12 weeks. It will be interesting to see whether today's announcement of a fuel tax hike is affecting those next set of numbers. Domino's Pizza has delivered more good news to shareholders, upgrading its earnings forecast after first quarter sales beat the company's expectations. The fast food franchise expects underlying earnings to rise by 25%, up from its earlier forecast of 20%. There was same-store sales growth in Australia, New Zealand, Japan and in beleaguered Europe. Things not so positive with pizza's natural companion, with Coca-Cola Amatil to cut 57 jobs while it moves production from its Bayswater plant to a larger facility in Melbourne. The company is targeting $100 million in cost savings over the next 3 years. The head of one of Australia's most controversial coal producers has launched a defence of the maligned energy source, arguing it will play a crucial role in addressing climate change. Whitehaven Coal Chairman Mark Vaile says global demand for coal will continue to rise steadily, with prices to recover significantly over the medium term. And that is the day in business. Back to you, Peter.
Thanks, Carrington. After the break, my next guest is building a suburb in Melbourne. Stand by for his vision splendid.